little bit there about why we're interested in technology. It might be worth giving you a little bit of background from a UK perspective as to how this sort of came up. Back in 2017, we did a kind of research / consultation / diplomatic / think piece. I still not sure anyone really knows what they call it, which was looking at what tools people were using in audit at that time. So what, about 5 years ago? And it was interesting. Data analytics had become basically mandatory at some of the audit firms. A couple of the big four firms mandated the use of data analytics when it came to testing revenue. And that was a rebuttable presumption. So you must do it unless you have a particularly good reason not to. We also found, interestingly though, that there was a little bit of a disconnect between what auditors were telling their clients they were going to do and how much that actually ended up being used on a day-to-day basis. A lot of firms are going with big, exciting pitches saying we're going to use machine learning tools, we're going to use this, we're going to use that. And then when it came down to it, maybe a little bit of regression analysis at best. So there was a little bit of a disconnect between what was being said, what was being actually done, which we kind of really tried to investigate. And we discovered that one of the core reasons for that was, I guess to put it bluntly, fear. That if somebody used a tool in an audit, that the regulator would come along and say, you've done bad. Unequivocally, this is a disaster. You shouldn't have used this tool. It's not cool. And that's obviously a problem because we don't want to be seen as a hindrance to things that could promote quality. Following on from that, there are a couple of big reviews in the UK, which you may or may not be aware of. The first is one by our Competition and Markets Authority that looks at why all of our listed companies are audited by the Big Four. And one of the aspects that came up in that was technology. And actually, is technology a force that could help from a competitive perspective? If you're a smaller audit firm looking at auditing a huge client, perhaps you don't have the manpower that the Big Four do. Is there a way you can bridge that gap with certain kinds of technologies and certain kinds of tools? We also had what is known as a Bryden review in the UK, which is essentially a review undertaken by the government to explain why audit was not as good as it should be. They talked a lot about technology in that as well. And Sir Donald Bryden really thought about the potential for expanding audit into a space that included more people from a technology background, which really got us onto an important question that I've already spoken about to a few people, which is it easier to train an auditor to use a tool well, or is it better to train, a data scientist in how to do audit? I suspect that's a debate that's been on for a long time and will continue well into my retirement. Finally, then in the last few years, we've really tried to learn lessons from those reviews and consultations. We put out some guidance last year, which was a really interesting experience, which was on, if you're using data analytics in audit, how do you address exceptions? So if you use a data analytics tool and you've got 15,000 exceptions, what do you need to do as an auditor? Do you need to go through every single one of them? Can you group them up? Or can you ask yourself a question, which is, well, if I've got 15,000 exceptions, have I just done my thing badly to start with? Have I not thought about the parameters correctly? This was something that kept coming up again and again in inspections, where people would run a data analytics tool, get a vast number of exceptions, and then spend hours and hours and hours and hours going through all of the exceptions, looking at every single one, no real consideration of if you could group them up, if you could sample them, if you could stratify those exceptions. And it was having a genuinely negative impact on audit quality. People were devoting so much time to addressing these exceptions, some of which were probably not really exceptions. They perhaps just not quite understood the tool properly to start with, rather than spending that time on looking at really judgmental areas and thinking about high risk areas in the financial statements. So we've put some guidance together, all available online. I can give the links out to that later. We've also then formed a big steering group where we've tried to really think about our approach as a regulator